Hello, everybody, and thank you very much for joining the Geneva Association Risk Conversations webinar today. My name is Darren Payne, and I'm the Research Director responsible for cyber and evolving liability workstreams here at the GA. The topic of today's session is cyber terror and cyber war, strengthening insurability through clarity and partnerships. This work represents the culmination of a whole body of research that we've been undertaking over the past 2 years in collaboration with the International Forum of Terrorism Risk and Reinsurance Pools, shortened to IFTRIP, which I'll use throughout the presentation. We aim to showcase some of that research over the next 60 minutes in the presentation itself and subsequent panel discussion. In terms of agenda, we want the session to be as interactive as possible. So in a moment, I will briefly go over some of the Zoom housekeeping protocols that will enable you to post or ask questions in the webinar itself. After introducing our panel of experts, I will then set the scene by summarizing some of the key insights from the GA IFTRIP reports. This will hopefully set us up nicely for our subsequent panel discussion before we pick up some of the questions directly in the formal Q&A in the final third of today's webinar. Time permitting, we hope to squeeze in some brief concluding remarks, but I'm going to monitor the time as we go. So, in terms of Zoom housekeeping, I guess over the past couple of years, I'm sure most, if not all of you, have become very familiar with the various video conferencing applications. But for those who are not kind of Zoom users, we will be using the platform in two main ways to gather your input. You can either click the Q&A button at any time during the webinar and write your question. I'll try to keep an eye on those as we go in case we can intersperse them with the discussion with the panel. If not, we'll definitely try and pick them up in the formal Q&A. Alternatively, for those brave enough to want to ask a question verbally, please raise your hand during the formal Q&A session, and we can unmute you and you can ask your question directly. Hopefully we don't have any internet gremlins today, but in case you do have any technical difficulties, please use the chat function and we will do our best to assist you. Finally, just to let you know, today's session is being recorded, and a copy of the slides and a link to the recording will be circulated to all attendees in the coming days. So, with that general introduction, let me now introduce our panel of experts. Starting on the left of at least on the slide itself, we have John Bateman. John is a fellow in the Cyber Policy Initiative of the Technology and International Affairs Program at the Carnegie Endowment for International Peace. He has written extensively about cyber security policy issues, and in a previous life was an intelligence officer within the US Secretary of Defense. Next up is Rachel Ann Carter. Until recently, Rachel was the GA's Director of Cyber Research, but now she runs her own cyber innovation consulting firm based in London. Earlier in her career, Rachel worked at the OECD, primarily in developing the e-platform on terrorism risk insurance, but she's also worked at Paul Reed, Lloyd's, and Tokyo Marine Kiln. Our third panelist is Chris Wallace. Chris is Chief Executive of the Australian Reinsurance Pool Corporation, ARPC, another acronym that we'll probably use at some point during the webinar, but he's also the President of IFTRIP. A seasoned insurance executive, Chris has extensive experience in insurance underwriting and claims management roles. He's both within the insurance sector amongst the carriers, but as well as a consultant to the insurance industry. Through his role with the ARPC, Chris is also a member of the OECD High-Level Advisory Board for the financial management of large-scale catastrophe risks. Finally, we are joined by Matt Webb. Matt is a cyber underwriter at Hiscox, working in the London market, responsible for delivering the team's approach to underwriting new product development and pricing. As part of his role, Matt is also the chair of the Lloyd's Market Association Cyber Business Panel, and we were hoping to ask him detailed questions about some of the work that the LMA have been putting out on the cyber policy language. So many thanks to all of the panelists for joining today's webinar. I'm really excited to be able to kind of talk and engage with such a distinguished and expert panel. So, as I mentioned at the top, if we go to the next slide, please, I'll be providing a bit of a scene setting by highlighting some of the key themes from the GA IFTRIP work programme. Actually, we've published 3 reports over the past 18 months, and they're here on the screen, into at least the front covers. I won't be able to go through these in detail, so what I will provide is very much a high-level synopsis, but the reports are available on the GA's website, and I definitely encourage you to go there for a more in-depth look. So if we can go to the next slide, please. So I want to start off by highlighting one of the key insights from the GA IFTRIP work, especially prominent in the first 2 reports, relates to the challenges that arise because of terminological ambiguity surrounding cyber policy wordings, especially in the context of war and terrorism. Increasingly over recent years, we've seen cyber attacks that don't neatly fit into well-recognized definitions of cyber war or cyber terrorism. We've seen incidents where nation states are suspected of being behind an attack, or at least providing a safe harbor for the hackers, but not part of outright military conflict. Nor have those attacks been linked to political, ideological, or religious goals that are usually associated with terrorism. So there's sort of a definitional gap has opened up. But rather than stretch the meanings of cyber terrorism and cyber war to narrow that gap from each end, the GA and IFTRIP have promoted the use of the term hostile cyber activity, or HCA, another acronym that we're sure to be using again, it covers the range of malicious activity located beyond cyber terrorism, but short of outright cyber war. And such enhanced policy language, we think, could help overcome 2 key uncertainties that are often crucial when deciding the scope and validity of insurance for cyber events. One is attribution, determining who is responsible for an incident. The attribution of an attack to a specific group is often very controversial and can prove very difficult legally. We saw that most notably in the context of the NotPetya attack in 2017, where it prompted significant litigation arguing whether it was or was not an act of war. And the second key uncertainty is characterization, whether the cyber incident itself can be linked to a hostile or warlike activities, or it reflects other gains related to financial or through criminal activity or industrial or political espionage. And the hope with more precise and explicit language within insurance contracts, like HCA, we think that will create more contract certainty, which will be beneficial in expanding the scope of cyber insurance and its penetration. For instance, policies referencing HCA might stipulate it's only necessary to prove if a state was involved rather than having to pinpoint which one. Next slide, please. So more granular classifications of cyber incidents like HCA will help provide greater clarity for insurers as well as their policyholders. But market acceptance of those things takes time, and even then, it may only go so far to overcome some of the challenges with cyber. One of the key things that we try to outline in the latest report is the potential for large accumulated losses. This table tries to summarize some of the material that we synthesized within the report based on existing studies that are out there. These are based on deterministic scenario analyses. And the 3 that we highlight here are some sort of widespread contagious malware spread, a major cloud outage, or an disruption to critical infrastructure, such as a power outage. And I just want you to concentrate perhaps on 2 columns within here, the blue and the darker grey. Under the darker grey, one of the things that stands out is maybe for a couple of those scenarios, the top 2, the economic losses are not unprecedented, or at least they don't look that large compared to, say, a natural catastrophe. But when you get down to a significant disruption to an infrastructure, which could be widely defined, it could be like software, networks, or actual physical infrastructure. The economic loss is extremely large, much larger, an order of magnitude larger from some of those other events. So that brings me to the second column, which is the blue one, which says that actually, even around those estimates of the potential losses, the uncertainty is high, and it gets even higher when you're talking about an infrastructure. And fundamentally, what we conclude from those existing studies, and they're not exhaustive, but I think they're illustrative at least, some of these losses that are related to cyber are just too big and too uncertain for private insurers to absorb alone. Next slide, please. And this will be the final scene setting. So this accumulation issue is a key reason why the latest GA report on HCA makes the case for some form of government backstop or private-public partnership. PPP, another acronym that we'll throw in just to complete the set. This is where the private sector or private insurance market absorbs the losses to a defined limit, but beyond which public funds inevitably have to take over. And this, I don't intend to go through this slide in any detail, but one of the couple of key takeaways is that there are a number of, if you're convinced about the logic behind a PPP, you need to think about what sort of design features you might well want to build in it. And we've kind of selected 6 here that we review within the report itself, whether it's a multi-peril, whether it's mandatory or voluntary, whether it's pre-funded, whether its payouts are based on parametric or indemnity solutions, or its pricing principles are based on mutuality or solidarity. And finally, whether it's a permanent scheme or it's actually just up and running for a temporary period. And what we go at length within the report is trying to think about what the pros and cons are against each of those different features. And one of the key conclusions is that there will be trade-offs in adopting any particular defined design features. But we, at least at the GA, think that the logic behind some sort of private-public partnership is becoming increasingly compelling. We haven't yet to see a systemic cyber event, but our kind of aim is to try and identify or at least highlight the potential and start thinking about what we put schemes in place to address a potential systemic cyber event ex ante rather than waiting for an event to happen before you do something. So with that general introduction, I want to move now to the sort of discussion with the experts on our panel. And maybe we can start off on the terminological ambiguity point, which is fundamental throughout our work on HCA. And maybe Rachel, given you were instrumental in the initiation of the work, but also the first 2 reports as a key author of those, maybe you could give a sketch and outline of how the HCA would work in practice, and maybe what sorts of the challenges of attribution and characterization still persist.
Thank you, Darren. So the key with hostile cyber activity, HCA, as Darren has already referred to it, is that it makes it easier for an insurer to categorize. In terms of commercial insurance offerings, it's up to each individual insurer to decide what is and what isn't covered. But in order to do that, there needs to be absolute clarity regarding what is and isn't covered. In terms of hostile cyber activity itself, it removes the current challenge of attribution. At present, for attribution, you need to be able to determine exactly that it was firstly a state actor and then which actor. So in terms of hostile cyber activity, what you need to do instead is have links to the state. So you need to be have a degree of certainty. It's a lower degree than what would be in place under, I guess, existing attribution processes, but essentially some link to the state, but it doesn't necessarily matter if you can determine with absolute certainty which state is responsible. And in terms of the actual links that are required, there's also fewer links as long as a state is involved to some degree. So that includes a state being the active actor themselves and or a state using a different cyber perpetrator to carry out an activity. In terms of, I guess, the main sort of benefit of using this term is to overcome terminological uncertainty. And with that, what we believe is, you saw on Darren's slides that we had the grey band of uncertainty. So at present, there is some cyber terror which is which is covered either by commercial offerings and or by some of the terrorism pools, and cyber war on the other extreme, which is not covered at all in any commercial offering. So what this does is that area which is beyond terrorism and not war, it creates a barrier in which an insurer can decide either to include cover and or to exclude cover as they see fit, and also, for example, to sublimit it or to create any other terms and conditions. And in terms of the use of this term, it's not only advantageous to an individual carrier, but it creates some international industry-wide certainty in terms of the actual terminology that we're currently using.
Thanks for that. Actually, we have a question about that may well be relevant to throw in here from the audience, which is how, if the onus is on the insurer, how can we attribute this to a nation state, even if undeclared? How would we deal with that within the HCA?
Sorry, Darren, did you want me to answer this?
Yes, sorry. So I was just going to follow up.
Apologies,
yeah.
I didn't know whether. So in terms of the onus will be on the insurer to determine who the actor is. Sorry, I'm just bringing up the question again. So in terms of HCA, the main benefit is to look for certain factors which link the attack to a state. So for example, things like complexity, the type of resources that are needed, coding, sort of going behind an attack itself and looking at, I suppose, the fingerprint as such of the attack. Is that similar to other state actors? Is it coming from a particular state? For example, what elements collectively are suggesting that it's a state behind this attack? It is, you still, in terms of doing that, need to have at least a degree of certainty that it is a state actor. But if you, for example, a lot of firms use the various different intelligence and or providers that will help them to determine, I guess, who's behind an attack and where an attack is coming from, that you can therefore see, I guess, patterns such that an attack can be more closely linked to a particular state. And in terms of the state, it's, again, as I mentioned, it doesn't need to be pinpointed to a particular state or a particular group within a state. Rather, as long as there is links to that state, then the activity is hostile cyber activity.
Okay. I'm sure we'll pick this up again when we talk to Matt about the Lloyd's Market Association. Maybe we want to deal with that now, Matt.
Yeah, I was just going to say that, I mean, attribution ultimately is a challenge that we will always be faced with and need to overcome. And absolutely, you know, this is an exclusion that we're looking at. So the burden of proof is on the insurers to discharge. I think where we've looked to address attribution in the LMA clauses is to have a sort of a list in sort of sequential order of things that insurers would look at when deciding to attribute the incident to a state. And so it starts with the state that's been impacted by the attack, actually attributing to it to a state. And we are seeing an increasing amount of state attribution as well. We did see it with WannaCry, the UK government. We saw it with NotPetya in the US, and actually in the Merck judgment, the attribution wasn't even a sort of a bone of contention, which was discussed in the judgment. We've even seen it down to sort of individual incidents like Equifax and the Marriott breaches. So you've got the impacted state making the attribution, and then that can take some time. I think states have come out and said accuracy is important when making attribution. And so to prevent delays in adjusting claims, the next stage that insurers may look towards is evidence that's out in the public domain. So whether that's security researchers or experts attributing the event, and it needs to be, at a threshold level, which the courts would recognise as sufficient. And then in the event that neither of those two things happen, it's up to the parties to look for any other evidence that could support attribution. And so I think having an attribution clause, ultimately we will need to deal with it. And we've tried to meet that head on with the LMA clauses to be helpful to clients so they understand what would go on in that adjustment process.
Yeah. I know, John, I want to come to John in a moment, because I know he's been working on a slightly different way of kind of thinking about some of these exclusion clauses that probably is less reliant on attribution. But before I do so, maybe I could ask Chris. I mean, you're a kind of practitioner amongst the pools. How are you seeing these existing contracts and pooling regimes? How do they deal with this sort of definitional ambiguity or terminological ambiguity?
Thank you, Darren. Hello, everyone. I guess I wanted to start with that, from my perspective, standalone cyber insurance products often do provide a small level of cover for physical damage and obviously for financial support, with less focus on attribution. This issue of attribution seems to really come to the fore with the traditional property insurance products. And traditional property products have always had a war exclusion. I think that's uncontroversial. Terrorism exclusions came into products after the September 11 attacks in the USA to a greater extent. And then more recently, we've seen exclusions for electronic equipment exposures, and then exclusions for cyber exposures. And more recently, the removal of silent cyber from property covers. So it just seems to be attribution seems to be a peculiarity of these traditional property insurance covers. And these covers are providing large asset protection, whereas the standalone cyber products are limited or have sublimits or have a smaller scale of cover. So I think the attribution discussions are critical. And from a pool perspective, many pools actually provide cover for cyber terrorism, provided that there's a physical damage trigger. And so there is a class of cover that is available to some extent in many pools, provided that there's a physical damage trigger. And the language that's often used is no matter the cause. So I guess from a practical perspective, saying to I'm just talking here from a sort of a policy perspective, as in a government policy perspective, saying to an insured that if a terrorism event happened because of a traditional attack and there was damage from it, but it's not covered because the trigger was a cyber trigger which caused a physical damage attack, can be quite challenging from a government policy perspective to explain. So pools do cover some level of cover, and really the issue in the pooling environment has been around non-damage, business interruption, and cyber terrorism that's causing financial harm, which is sort of outside the cover of many pools. Pools also have exclusions for war as well. So obviously, if it's a war event, the attribution comes back to the fore again as being really important. I think one thing, lastly, I'll just say is that where governments are providing cyber terrorism cover in pools, and they do that around the world, if there is a disagreement around attribution, it can put pressure on governments to step in and provide cover. So I think that attribution is a complex issue. It is difficult to attribute, although there are cases that have been attributed. And I think that I would advocate actually that when we come to the discussion later on how to solve the problem, I think that attribution is part of the problem, and there's probably other ways to design pools that might put less reliance on attribution.
Interesting, thanks for that. And so, John, I mean, I teed you up a little bit, and I may well have misinterpreted some of what the work that you've been doing at the Carnegie, but I take it at face value that you kind of, another way of doing it is, rather than go further into the weeds of attribution, is to try and think about a pretty pure war exclusion and look for other ways by which you might demark what is an insurable or a non-insurable cyber. But maybe you could just elaborate a little bit more about that work.
Yeah, absolutely, Darren. And I think one thing for people who are not in the weeds of this issue every day, like some of us on this panel are, I think it helps to just take a step back and note that, we've got a lot of different experimental concepts that have been proposed. We've got HCA, we've got the LMA wordings, we've got the exclusions in my paper from Carnegie. Then there's other ideas out there from Chubb with the widespread events. Capsicum Re, they published a report a few years ago. And they're all different, and I can speak to mine, but I think what does unite them all is a shared recognition that traditional wordings and concepts were inadequate, and we need innovation and experimentation to kind of freshen up the concepts in cyber insurance language. So I just think it's worth noting, because in some ways the similarities are greater than the differences amongst our points of view. And there are still those, I think, that are maybe suspicious of what the effects of new language will be. So I just kind of wanted to state that up front. So why did we at Carnegie weigh in on this? We're an independent international NGO outside of the insurance industry with expertise in international conflict and cyber strategy and how states are using these tools. And what I was hoping to do in my report is kind of stretch or stimulate the thinking within the insurance industry, see what else might be possible. And I came to a couple tentative conclusions. One is that it makes sense to think about how perhaps a collection of exclusions could work together rather than trying to place all the weight on a war exclusion. So in my report, I described what it would look like to create a more refined cyber catastrophe exclusion that operates irrespective of the perpetrator or the trigger, and is primarily based on the impact of the event within one country or multiple countries. And this would account for the fact that not all large-scale cyber incidents are state-sponsored or outgrowths of war. We increasingly have criminal actors that are capable of doing damage on a similar scale. There can be natural disasters or accidents or human error that have cascading systemic impacts. And then, of course, war brings you into this whole attribution morass. So one proposal I had is to create a kind of trigger agnostic, impact-based cyber catastrophe exclusion. And then the goal there would be that would kind of take care of most of the questions around insurability. Although, of course, writing such an exclusion is no easy task. Then we could decide then if we still wanted a war exclusion on top of that. And the purpose then of that war exclusion, it would not need to do so much. At that point, it could focus on a select or specific set of use cases, like, for example, cyber incidents that are outgrowths of a large-scale kinetic conflict, like we might see in Ukraine soon, but might themselves not meet that catastrophe threshold. So that's kind of the ins and outs of the Carnegie proposal. I'll just say that we're still very interested in how to solve the question of systemic cyber risk. And in the end, exclusions only are going to be part of the solution, right? We actually need governments, critical infrastructure operators, tech companies, insurance companies to also be thinking about how to identify, reduce, and manage the core problem here, which is systemic cyber risk itself.
Yeah, no, that's a very good point. Maybe, Matt, maybe I could ask you this. I mean, given that the LMA had just recently, I mean, I guess in terms of the suite of options that John outlined in terms of different approaches, the LMA is further down the maturity spectrum. It's kind of actually out there. So maybe you can give your perspective on how that's been received, and what are the kind of people saying about those new LMA type war exclusions.
Yeah, so just to give some background to that as well. So So the LMA is an association that represents all of the markets that write insurance at Lloyd's, and has a series of panels that cover each one of the lines of business. And I currently chair the cyber one of those panels. And so casting our minds back to sort of 2019, when we first started developing these suite of new clauses, the challenge at the time was, not Petri had happened, and there was a lot of debate in the market as to how the sort of war exclusions that were in policies would operate. And I think the other sort of important thing that not everyone may be aware of is that managing agents at Lloyd's have to comply with the performance management guidelines, and they state that various classes have to have a war exclusion. So this is one of the only clauses that is mandated within a cyber policy. And so we set up a group that and we were essentially trying to, the goal that we set out was to do a redraft of NMA 464, which is the war exclusion that you see in pretty much all, or a variation of it that you see in all of insurance policies. That was developed back in 1938, which was off the back of substantial bombing in Ethiopia and in the Spanish Civil War. So clearly not a time when cyber warfare was considered. And so we were looking to update 464 to provide adequate cover and clarity to customers, whilst protecting our balance sheets and those of our reinsurance partners. And so we went through various iterations of the clauses, and each time we were trying to score them against various categories. So does the clause provide adequate cover to customers? Are the clauses clear and concise? Are they commercially viable? Are they an appetite for me as an insurer? And will they be an appetite for my reinsurers? And so that group was made up of 10 managing agents that write cyber at Lloyd's. We involved feedback from 8 different brokers. We involved 4 reinsurers. We had DAC Beechcroft helping us out throughout. We spoke to Ethereal Law out in the States. I know one of our partners, Munich Re, had a QC review the language that we pulled together. And we involved various regulators like Lloyd's and our colleagues at the IUA as well. And so we were able to develop a suite of clauses that then introduced a number of new topics, whether that's cyber operation, whether it's a threshold below which we feel that the insurance market can respond and above which we feel that it's uninsurable. As I mentioned before, we tried to meet the attribution challenge head on, and also look at how collateral damage would be dealt with as well by introducing the concept of a bystanding cyber asset. I think the back to your original question of how it's been met in the market, there's certainly a recognition that things need to change and evolve. And I think one of the takeaways from the Merck judgment, whether, as surprising as it was, certainly surprising from a reasoning perspective, it did flag that if cyber is not mentioned in the exclusion, then in the state of Jersey, that in their eyes that the exclusion does not apply to it. There's open discussion happening at the moment, and I think to John's point, there's a number of conversations happening. There's a number of concepts out there, and we absolutely welcome the debate. I think the key thing is that we need to change in the market. We've made a giant step forward, and I think we'll see good progress over the next sort of 12 months or so.
Right. Yeah, we've got a few things in the chat that we may well, or the Q&A rather, that may well come back to some of the terminology issues. But I want to shift gears slightly, and Chris kind of set us up a little bit on this front, which was thinking about terminology is one thing. Now we need to think about how could we improve risk sharing, pools, ultimately some potential government backstop. But one of the things I was going to ask Chris, how feasible is it to wrap some of these peak cyber risks within existing pooling arrangements? And will they succeed if there is no government backstop?
I think it's difficult to do. actually. I think the discussion today highlights that there's limited cover available in the market presently for these peak losses. Governments look at this issue very differently to the insurance industry. So when you talk to governments, are you talking to the defence military part of government, the Home Affairs, Homeland Security part of government, the intelligence part of government, or the finance, treasury part of government? They all have different accountabilities and different objectives. And I think that's part of the challenge in terms of trying to get consensus on how to solve the problem. Government's also pretty exhausted financially in terms of responding to the pandemic and just don't have appetite to put more financial exposure out. The backstops that are required actually need to be priced as well. They're not free, and it's very hard to calculate what a reasonable rate of return is to payers that are exposed to these losses. And I just think that the most likely way to solve this problem is to actually have a small pool that doesn't have attribution, that doesn't have, let's call it trigger agnostic, and actually has some cover. Because from my perspective, I'm really interested in trying to make cover available to society. That's probably one of my drivers, but it's very hard to do in the current context.
Yeah. And maybe Rachel, in the report, we kind of review some of the existing pooling arrangements, or with some of which got a government backstop. What sort of lessons do you think we can learn from some of those existing pools, albeit for other types of perils?
Thank you, Darren. So firstly, just to echo Chris's comments regarding who we're bringing together in terms of public-private partnerships. So obviously, if we're looking at solutions, we need to bring in insurers across the globe. We need to bring in intelligence professionals, cyber professionals. We need to bring in government and or policymakers. I suppose problematically, I mean, in terms of cyber, given that it's not geographically bounded as opposed to other risks, for example, natural catastrophes, the challenge is in terms of a solution, although it may be optimal, for example, to have an international pool that covers certain types of cyber events or certain types of cyber events after a particular threshold, for example. The real challenge is that in the short to medium term, it's only going to be possible at a individual jurisdictional level. So on top of bringing together the right people, there's financial challenges, there's political challenges as well. In the third GA report, what we essentially did is we basically catalogued a variety of different factors which go into decisions regarding whether a PPP is relevant in a particular jurisdiction and how to weigh those up, or I suppose the questions that would be asked. But again, echoing that jurisdiction by jurisdiction, it's ultimately also going to be driven by existing legal systems, by financial necessity and or capacity and or willingness of the market. I mean, to the extent possible, as much cover should be left with the market wherever possible, the primary and the reinsurance market. But where that's not possible, we should, I suppose, at least start the discussions regarding how can we move towards where it's seen as necessary, PPPs, and or even sort of, I suppose, a second step is how can we move towards more, to the extent possible, consensus amongst jurisdictions. So, for example, regarding language used, regarding how we categorize, how we attribute events per se. But again, there are different measures in place, different organizations that are sort of moving across the technical sector, the government and policy sector, and the insurance sector to try and make that happen. But I suppose in terms of the maturity of that, we're still at the very beginning of that path. And I suppose the work that the GA and others have done in that area is a very good start as a stepping stone. but it should be, I suppose, seen in that regard as a constantly moving, constantly, I guess, optimizing process.
Yeah. I want to go back to something you said early on in your remark there, and maybe pose it to John. It links to something we've got a question in the Q&A, which is, given the potential international features of a catastrophic cyber event, how would a government backstop? I mean, you have to be an how would there be coordination across governments, potentially kind of coordinate response? Is that something you thought about at the Carnegie, about the international dimensions of the catastrophic cyber?
It's a great question, Darren. There's so many. First of all, the threat or risk itself is international in nature, right? Geopolitical tensions amongst major powers are driving cyber risk and making it hard to solve. Cyber events can spill across borders, and then when that happens, we want the regulatory tools and the political will and things like public-private partnerships to somehow harmonize. But I agree with Rachel in the sense that we really don't have any operating public-private partnership in the world right now on the scale that needs to happen to solve these major cyber risk problems. So it feels over-ambitious at this point to imagine how different national public-private partnerships would coordinate. I think probably I would start at an earlier stage in terms of getting the insurance industry to speak with one voice and even be clearly calling for the existence or creation of these public-private partnerships. I think to me that the momentum has been building for that, but it's still a kind of diffuse conversation. And I don't know if there's ever been a major moment where the insurance industry has stood up with one voice and said to major governments, this is what we want and need. The other things that might be considered to push the ball forward are what might be done in, let's say, a smaller forward-leaning country like Israel, for example, where maybe an experiment or a pilot program could be created that other countries might learn from. And then finally, I would say that the major thing that could lead to the creation of public-private partnerships is, of course, a huge catastrophe. And no one wants that to happen, but we've seen with 9/11 and with other terrorist attacks that this is often the necessary and sufficient condition for the creation of a public-private partnership. So I think it's in the insurance industry's interest to continue devising specifics along the lines of the trade-offs outlined in the Geneva Association report, so that when such an event happens, there's a proposal ready to go.
Okay, thank you. I'm already dipping into the Q&A that are coming, and so thanks to the audience for sending those along. One of the ones is, and maybe I could direct this at Chris, which says, would an organisation like Pool Re, so I think this is probably someone from the UK that's sending in, would an organisation like Pool Re start pooling cyber risks related to war or any systemic nature? You have any thoughts about that? Not necessarily on Pool Re, but just maybe in terms of the Australian. How have you been? What sort of things have been going on in your world in terms of systemic risk coverage?
Well, I just don't see war as being a risk covered by pools. It's generally excluded by pools. It's certainly excluded in the Australian scheme. The challenge has been, is it war? Or is it? Sorry. The challenge for us has been that cyber terrorism has been excluded from the Australian scheme, and it's not covered universally across pools either.
And is there any sense in which some of the kind of stretching some of those definitions of this activity that doesn't meet the sort of outright conflict criteria? Is there any sense in which that may well be embracing within some of that existing pools already? Something like terrorism or cyber crime that's got linked somehow to state sponsorship?
I don't know. I think it's hard to change the pools. The pools generally came into place because of a crisis.
Right.
Picking up on that discussion, and they sort of have an inertia, and they are hard to change. So it usually requires an external review or some major policy change to bring about those sorts of updates.
Yeah.
I think that this whole problem that we're facing on cyber, the insurance industry needing to define what cover it's providing and society needing to provide cover to protect the assets has arisen because it's such a modern risk. And the nature of products being legacy products, there's just as a consequence, there are gaps in cover, gaps in definitions. So, and we haven't talked yet about the challenges for attribution. We've talked about some examples of events being attributed, but generally there's a national interest perspective attached to it as well. Is it in the national interest to attribute a certain attacker? And that can get in the way of an event as well. There might be good reasons not to attribute an attacker for to protect society or to protect important assets that have been deployed by governments.
I mean, picking up on that point, Matt, I mean, how those sorts of considerations when you were thinking about the LMA, how did you kind of address some of those points about the sort of incentives to attribute?
I think the key thing here is to not read the attribution part without reading what is being excluded. And so the HCA and the LMA, they're very closely related concepts, where the Geneva Association have developed a well thought through HCA definition. We've got the cyber operations with then a list of thresholds that would be met, which would be excluded. Now, those thresholds are set at a very high level. You're talking major detrimental impact on essential services that impact the vital functioning of a state. This is not an everyday event. This is not an individual attack. This is not espionage. And so where you are considering, before you even consider attribution, you need to consider whether the exclusion is bitten. And if you've got a situation where the exclusion has bitten, that is affecting everyday life and will be clear. Then you move on to attribution, and you're talking a magnitude at such a level that when you do begin the attribution process, we have seen more states attributing recently, and can take more sort of solace in that. But where that doesn't exist, we will open it up to other evidence, and that's where the objectively reasonable evidence as to attribution. So this isn't a sort of a tweet, presidential tweet or something like that. It's either the state themselves say attributing it, or leading experts attributing it. And the key thing on the attribution is that we're not trying to overwrite the burden of proof. And equally, we can't just set out, okay, if these things exist, then the court must take them as said. There will be rebuttable presumption on that. And so there is a threshold of convincing the courts that the particular incident was attributed to that state.
Yeah. We're coming into the last 15 minutes of the webinar, but I just did notice that we have two people that have been brave enough to raise their hand. So I want to make sure that we give the opportunity to them to raise the question rather than me trying to interpret it. So maybe, if possible, just going down the list, we have David Nordell. David, do you want to raise your question?
Yes, thank you. First of all, I should preface my questions, in fact, it's a multi-part question, by saying I don't come from the insurance world. I'm from the cyber side entirely. Or I should say cyber plus terrorism. So I'm looking at the issues very much from that point of view. So first part, there's a well-known phenomenon of state-backed private actors, particularly people who are working for the state, for state intelligence in Russia and China, who are given the freedom to carry out cyber attacks on whichever targets they like in their free time, as long as the targets are not in their own countries or allies. So how do we deal with the attribution of this kind of attack? Second question is, what happens if, let's say, there are multiple attacks against assets belonging to a particular country around the world? The best example I can think of is the 95 ports that are controlled by Chinese interests around the world. So basically, it's the state that owns these assets, whether or not there's camouflage of some kind of commercial interest. And let's say there's political tension and 10 or 20 of these ports are attacked within a short time. What's the status of these from the point of view of insurance? I think I'll leave it at that. I mean, I've got a third question, but it's complicated enough.
Yeah, thanks for that. I mean, state-backed criminals. Maybe John, do you have a view on that?
Yeah, sure. And David, this is a really important question and problem that you've raised. I think I would break it into two parts. The first thing is that insurance language and ultimately courts interpreting that language need to decide what types of agency relationships would count as state-backed under the language being described. So for example, the LMA wording uses the language of a state or those acting on its behalf. So we will need case law and precedent and practice to elucidate what it means to be acting on behalf of a state. I don't think that exists today. And just to defend LMA and their work, any new venture in this area is going to have ambiguities. We're going to need litigation and case law to elaborate on these things. So that's the conceptual problem, is what level of agency relationship would count as state-backed. But then you still have the evidentiary problem, which is how could it be determined the exact contours of a certain type of agency relationship when often, even for governments, that's a difficult problem. I used to be in the US intelligence community, and this was part of my job, was making these assessments. And it's a difficult problem, and it requires exquisite classified evidence typically. Outside of the intelligence realm, when, let's say, Mandiant or FireEye or one of the major firms is publishing an attribution report, they're often much more tentative about the link to the state, the nature of that agency relationship, simply because evidence isn't available in the forensics to come to a firm conclusion on that. So again, all I can do is say those are two important challenges.
Yeah. And Matt, did you have anything about on the asset side, or indeed to pick up what John was saying?
Yeah, just to pick up on what John was saying, and you are right, that is a challenge that we need to overcome. And in terms of those acting on behalf of the state, there were, we did look at a lot of different texts in terms of putting the exclusions together, whether that was government, sort of UK Centre for Protection of Critical National Infrastructure, various Department of Homeland Securities or EU regulations, to sort of take as much sort of recognised text as possible to flow into the exclusions. And then, of course, the Tallinn Manual was very helpful as well, which is an academic journal book on how international law applies to cyber incidents. And one of the interesting things there around sort of state-sponsored work was on the Nicaragua judgment, and it was around the Contra rebels were acting on behalf of the US government. And the finding there was that simply providing funding to these state-sponsored groups doesn't qualify them as state-sponsored. But when you start providing training and weaponry, so in this case, training to develop exploit kits or weaponry, the actual knowledge of a zero-day vulnerability, for instance, that's when they start crossing over from a sort of criminal organisation that's having a blind eye turned to their activities by the state and actually becoming part of that state.
Yeah, I'm conscious of time. We're coming into the sort of last 6 or so minutes of that, but I want to try and squeeze in one more caller. Sound like a radio disc jockey then. I mean, one person who can we go to Catherine Zeman? Maybe you would like to raise your question.
I think that was a mistake. I didn't know I raised my hand.
Oh, okay, no problem. No problem.
Sorry.
Not at all. Maybe Paul Walsh. Maybe we can get one caller.
Hello, can you hear me?
We can.
Lovely. Thank you very much. I just had a very straight question, but I do know it's divided opinion among insurers. Should insurers be paying ransomware attackers?
Anybody want to take the first chew of that?
I'm happy to sort of wade in with some thoughts there. So insurers are ultimately insuring a business. So we're insuring a company, and we're insuring them for their cyber risks, whether that's privacy liability for wrongful use of data, whether that is a breach and they've had data stolen, or what we've seen over the last 18 to 24 months, certainly ramping up anyway, ransomware events. So we are indemnifying the company that is buying the insurance. And it just so happens that as part of that, we may pay the ransomware gang that have infiltrated their systems. Now, there are commonly checks and balances made before handing over that ransom, not least to ensure that the organisation in question has not been sanctioned, part of the OFAC guidance, or is a terrorist organisation. But equally, we would also check whether the organisation has sufficient backups to restore from, which would mean we don't have to pay the ransom demand. So, and sometimes there needs to be assessment of whether the backups, the integrity of the backups is sufficient to reduce the amount of business interruption. And generally, there is then a decision made over what would be the best course of action for our customer and our insured. So hopefully that goes some way to explain the sort of thinking behind our processes when we do receive a ransomware incident from one of our customers.
And Rachel, did you want to add anything on that?
Yeah, no, I just wanted to add as well, it's problematic if we have, for example, a blanket-based approach to ransomware, as in it's either paid by insurers and or not. That's a commercial decision that needs to be made by each carrier based on their own sort of appetite, policies, etc. We heard from Matt more about the commercial aspect of ransomware and the process of whether a ransom is or is not paid. But we also, I suppose, forget that sometimes in terms of whether a ransom is or isn't paid, it can affect daily lives, and not just in a commercial way. We've seen ransomware events that have affected supply chains, that have affected food, fuel. We've also seen a number of events that have affected medical facilities as well. So I suppose it's a case-by-case circumstance. If we do have a sort of blanket policy that, for example, ransoms cannot be paid, and you're then faced with a situation that a hospital is subject to a ransom, then really paying or not paying in that instance may also be the difference between life and death. And we have seen an example about a year ago in Germany where a patient did die as a result of a ransomware event.
Yeah. Now we have actually, thank you for that, Rachel and Matt, for taking that. We've now actually entered the last scheduled minute of the webinar, and I would be failing my Swiss fellow residents here if I allowed us to go over time. So I want to take that final minute. So first, thank everybody on the panel. I think that's been really fascinating. I've learned a lot. I'm sure there's loads more that we could talk about. And next time we should schedule maybe we normally had 75 minutes, but I think we're going to need at least a couple of hours to get through everything. The other thing I wanted to say is just and my colleagues at the GA would beat me over the head for not raising it. We will be looking for your feedback on the webinar itself. So thank you very much for participating. We will be sending out a pop-up survey that will come into your inbox. I'm not sure if it is immediately after the seminar or the webinar, but we really appreciate that because we take them very seriously in terms of thinking about whether our research is well targeted, but also how we can better kind of disseminate those messages. So many thanks to my panelists and many thanks to the people that joined online. With that, I close the session. Thank you very much.